A British executive was awarded a $1 billion bonus in November. Why does he need all that money? And why doesn't he do something with it? Well, let's find out. Welcome back to Matt's Money Matters. And to quote Timberland, it's been a long time. I shouldn't have left you without some economic analysis to step to. But summer's here, and there's plenty of money matters that need some thinking. So today, let me introduce you to Matt Moulding. He's the founder of the Hut Group, an e-commerce platform. And he did very well in November. He received a big payout, £830 million of new shares in his company. It's only a couple of months after the company listed on the London Stock Exchange. According to Forbes, he's now worth $2.7 billion US. And that's enough to buy 2,700 of these Porsche Spiders. Except that analogy is stupid, and I'll explain why in a moment. The big payout is because the company hit a value target. Put simply, the share price hit a particular level. And what that means is when the share price hits a level, you get a reward if you're an executive. The share price is basically an estimate of the company's future success or failure. We can go into that another time. What does it mean that he received this bonus? Well, Matt Moulding had shares in his company, and now he has a whole lot more. How much more? £830 million more shares. So he's richer on paper, but that doesn't necessarily mean he's richer in his bank account. That's an important consideration. It means he owns a bigger slice of the business, but it is locked into the business. A business can't function without capital. That means warehouses, equipment, tech, intellectual property, even the brand name. Those things are valuable in the hands of a business, but if you gave them to me, I wouldn't necessarily be able to do very much with them, unless I sold them to someone else or started my own business. So it's a big number, £830 million, and it represents his share of all those assets that the business owns. So when you get paid a bonus, where does that money come from? Well, most immediately, it comes from other shareholders. When an executive hits a big performance target, they get issued new shares, or if they get issued new shares, it reduces the value of everyone else's shares. But when the share price is up a lot, usually the other shareholders are quite happy to take a haircut to reward the managers of the business. So to be clear, he's got a bonus because he hit a price target. Everyone was better off. And so as a reward, he got given a larger slice of the company. It happens all the time, and usually these things are detailed very thoroughly well in advance. If it's a major company, it's always detailed well in advance. When the company listed on the stock exchange, all of this detail would have been in its reports, that he would receive this bonus if this price was hit. So all of the shareholders were aware going into this, they would have expected it. Moving a step further back, how did all of that value get created? How did the share price go up so much? Well, I can tell you, it's a good time to be in online shopping during the pandemic. More people are going online shopping, and even before the pandemic, it was a growing industry. This business, the Hut Group, is competing successfully with Amazon, and online shopping is a pretty brutal game. So it's very competitive. You've got to do your best. You've got to deliver for customers if you want to succeed and make money. So why doesn't he just give that money away to poor people? Well, he might. He could sell his shares to someone else, and then he could use those £830 million to donate to charity or whatever else. But to be clear, that would not mean that there's £830 million more cash in the economy. It means the ownership of those assets has changed hands. The brand, the warehouses, the intellectual property. Now, many wealthy people donate to charity, and they also invest in new enterprises. That's how new ideas become new businesses. Think of Jeff Bezos launching rockets, Elon Musk also launching rockets. Bezos invests in medical advancements. Elon Musk is invested into greener cars. Tesla, which can now self-drive. How cool. The key message here is to understand when people talk about wealth, they don't mean hoarding cash under a pillow. It's not like Scrooge McDuck with huge piles of gold coins. These are real hard assets. And intangible stuff too, like brands. What does that even mean? Does it really have a value? Well, I guess it does if the business can use it effectively. How do you redistribute the value of a brand? Or how do you redistribute the value of a warehouse that you own? If you're a billionaire and you own a lot of warehouses, we're not going to cure poverty by taking those warehouses from you and handing them out to other people or having the government operate them. We should absolutely be concerned about reducing poverty, but we need to put a little bit more thought and a little bit more effort into a solution. The warehouse has a function. It helps people get products that they need, and that's good for society. And if the warehouse is worth $100, the only way you can extract that value is by selling it to someone else or using it to do what warehouses do, warehouse stuff, storing stuff. And that's true of most assets. So to wrap up, this Matt Moulding fellow, he might well be not a great guy. I've never met him. And I'm not saying that he is. But what I can tell you is that there's a lot of debate about how rich people spend their wealth, and it's not always very accurate. It doesn't always give you a great representation. To be clear, I'm not here to defend rich people spending money on garbage. I hate that, but I hope this does give you some clarity over what a big bonus really means. Thanks for joining us today, and I'll see you next time on Matt's Money Matters.
A billion's a new million, 40's a new vodka, 40's a new 30, and baby, you a rock star.